Hello and welcome to this Mirror Facebook Live, all about soaring inflation and what it means for your money. I'm Sam Barker, a money reporter here at the Mirror. I'm very grateful to be joined today by the Mirror's head of business, Graham Hiscott. Hello, Graham.
Hi, nice to see you.
And you. So today we're going to be talking about what's going on with inflation, what's going up in price, and what it means for your money, your supermarkets, shopping, savings, pension, and more. We're going to be breaking all of this down for you today, including what to do if you're worried about rising costs and all of the government help which is still available. But we're also here to answer some of your questions. So if you have anything you'd like to ask us, or you just want to have your opinion heard, please do feel free to post it in the chat and we'll do our best. We'll keep an eye on the comments and we will try to answer as many as we can during this session and towards the end as well. So to set the scene, so we're talking today about inflation, which is another way of talking about the rising cost of living. This was 9.9% in the 12 months to August, slightly down on what it was in July, but still it's very clear that the cost of living crisis is continuing to squeeze household finances. So Graham, if we sort of kick things off, when we're talking about inflation, what are we really talking about?
Okay, well, so inflation is the 9.9% that you quite rightly quoted is actually based on something called the Consumer Price Index. So it's a measure of inflation. The figures come from the Office of National Statistics, if I can say it, and it's basically a basket of all manner of goods, right, from everything from petrol through to food and drink, through to, as you say, energy, a whole raft of things that households consume on a regular basis in one form or another.
I'm with you. And obviously, when we're talking about 9.9% inflation, this is just an average figure. And it actually, if you break it down, it gets into an awful lot of different kind of areas. So at the moment, what's really going up?
Okay, well, as you say, it had dipped. So it's come down slightly from the 10.1% it was in the year to July. I'll explain why that was, but certainly to answer your question, the things that are going up by more than that average, the big one that really stands out is food and drink, food and so food and soft drinks, basically. The price of that is going up by about, if you take it as an average, about 13% over the past year. But again, if you drill down into that, you'll see some products which are going up by less than that, but certainly some that are going up by a lot more than that. And it might be worth just throwing in some examples, if that's okay, Sam.
Yeah, please, yeah.
And also, if anyone wants to add their own comment on this, their own experience of things that they've noticed of going up a lot, and either in food and drink or elsewhere. But anyway, so within food and drink, you've got things like a pint of milk. The price of that's gone up by about 40% in the last year. So 40. Milk, butter, eggs, butter's one actually. It's been going up by a lot, and it's grabbed a lot of headlines because of people might remember the Lurpak.
Lurpak, yeah.
A tub of Lurpak, but anyway, so there's a lot within food and drink, which obviously is something that people are exposed to every day, certainly every week when they're doing their regular grocery shopping. So that's the biggie at the moment. There are some others like clothing, which have gone up a lot too. Now, the reason why it dipped slightly, the main reason for that was because of petrol and diesel prices, which came down from a little bit from the record highs that they hit earlier in the summer. But while you might see that dip as being a good thing, and in some ways it is, firstly, focusing on petrol and diesel, pump prices are still over about a third more than they were a year ago. So that's a big outlay still for a lot of households. And also, and Sam, I'm sure we're going to get onto this, but the dip that we've seen, and it was the first easing in inflation for about, I think it's the first time in 10 months, this might be a temporary reprieve.
Interesting. And certainly, yeah, I did want to ask you a little bit about the future of all of this. So we'll get into that a little bit later on the call. Now, one question which I think a lot of people have probably got is, we're talking about inflation, things going up in price, and a lot of people are looking at their energy bills and saying, well, I know what's costing me an awful lot of money. So with energy bills, how much are they sort of built into inflation at the moment?
Well, I mean, inflation, it's the biggest, when we've seen the inflation shoot up, and remember that the Bank of England, again, we can talk about this at maybe another time, but Bank of England's target for inflation, so what it thinks the inflation should be for the economy to be ticking over nicely without prices rising too much, but also it's about 2%. So 2%. So even though, as you say, inflation has dipped a bit, it's still about 5 times what the Bank of England and the government thinks it should be. Energy is certainly been the biggest driver of inflation rising sharply this year. It's the overriding reason. Now, we saw a spike in April, which was when Ofgem's price cap, that's the limits that it sets for about 24 million households. It spiked in April, and it's one of the reasons why it stayed high. Now, again, we'll probably talk about where inflation might peak, but certainly there had been talk about inflation going much higher than where we are now, even into the 20s%. So it may not go that far. So that's the good news. But again, you've got to put these figures into context. So 2% is where the inflation ideally should be. We're now still at 5 times that, and it could still go higher still. It will go higher still.
I mean, it's a pretty terrifying thought, and we're sort of going to hopefully cover off a little bit more of that later on this call. Yeah. Now, while we're on the subject of energy bills, there's something which I think is really important that we kind of bring you the latest, everything we know about the energy bills price freeze, which will be coming in from the 1st of October. So anyone that was with us 1 week ago, we were kind of doing a Facebook Live, and this was happening in the background, actually, almost as at the same time as the Queen. Very sadly, the news was coming out that the Queen had died. Now, the government in that week, they have brought out quite a few changes and announcements to the way that this energy bill price freeze is going to work. So just to sort of sum up what we're talking about, we were facing in October a huge rise in energy bills, and that's because, as Graham said, about 85% of UK homes are on deals regulated by the Ofgem price cap. So when the Ofgem price cap was going to go up in October, which is about a 65% rise on average, households were facing an astronomical increase in their energy bills. So the government's kind of response to this is what they're calling the energy price guarantee, which is something that you're going to see written about an awful lot more than it is now. So the energy price guarantee basically will freeze bills at a certain unit rate. So you won't be charged more than a certain amount per unit of energy that you use. So the government's figure, which they're bandying around as the average figure, is that bills will be capped at £2,500 a year for 2 years. The actual amount that you will pay will vary. So they've given a few kind of indicative amounts. If you're in a flat in a building, for example, your energy bill is likely to be quite low. If you're in a semi-detached house, they're slightly higher. And if you're in a detached house, they're even higher. So the range that the government's talking about when it comes to energy bills will be in the region of £1,300 up to about £3,300 for average use. That looks like the reality for the next 2 years. Now, what a lot of people have been telling the government in kind of as energy bills started to kind of increase and gather pace, was that we needed more targeted help for lowest income households, because freezing energy bills is all well and good, but you're freezing them for everybody. You're freezing them for the top 1% of earners and everybody else. Whereas the people who perhaps need the help the most are the ones who are struggling the most. So the government have taken that on board and they've done absolutely nothing with it. And the solution is the energy bill price freeze. So really interested to get people's opinions on this call, what you think of this and whether that's going to be enough. So please do post in the comments and we'll get around to it. Now the update, this is the really important bit. So most of what the government has said applies to people who are on variable rate energy deals, so 85% of the country. So obviously the next question is what happens to the other 15%? So these people tend to be on fixed term energy deals. And there was a bit of an increase in people taking these deals out because they looked at their forecast for energy bills in October and they thought, I can't afford that. I can take out a fixed rate deal, which is maybe more than I'm paying now, but that's going to protect me when energy bills go up again. And then what's happened is that Liz Truss's government have taken out that increase, potentially leaving people paying from October a higher price than they would have if they just stayed where they were and they'd not fixed their energy deal. So the government at the moment, we've spoken to all the energy companies about what their plans are from the 1st of October for people who've taken out fixed rate energy deals. And they've all said, we don't know, go and talk to the government, we're taking our cues from the government. So it now looks like, and we're going to firm this up, but it looks like if you are on a fixed rate energy deal and you are paying more than you would have on the Ofgem price cap for your property, that the new energy price guarantee, the bill freeze, will apply to you. If you are paying less than that, then it won't. That's kind of, as of this was sort of yesterday's news, but the government, they are still firming this up. So basically, it all depends on how much you're paying. If you're paying more than the price cap with a fixed rate deal, there should be, you will not end up paying any more than everybody else, basically on variable rate deals. How that's going to happen, we still don't know. So the government are talking about a big pot of money that people might be able to apply for. But really, I mean, everything the government said is no more than what I've said there. There's still quite a lot of, I's to dot and T's to cross on that. But we get an awful lot of questions about this, understandably. And I just thought it was, worth covering off. Another thing to mention, we get a lot of questions about this as well. Am I still getting the £400 energy bill discount that the government announced way back in April? The answer is yes, you are. So whatever you would be paying in the first year of this energy bill price freeze, you can knock 400 quid off that, because you will start from October getting lower monthly bills. It depends on your energy provider, but for most of them for about 6 months. However, in the second year of the price freeze, the government has not announced anything like that £400. So your energy bills presumably would go up by about £400 a year if you use a similar amount of energy. So that's kind of, they're just sort of covering off everything that we know at the moment about the sort of future of energy bills. If you've got any more questions about the specifics or anything else that you'd like to ask us, please do feel free, fire away in the comments, and we'll get back to you. But obviously, Graham, just wanted to sort of throw a question in. Obviously, we're talking about inflation, we're talking about high cost, the cost of living. What's happening with, I suppose, the other side of that equation? What's happening with our wages at the moment, please? Not mine and yours at the Mirror. Obviously, I'm talking, sort of broadly. What's happening with kind of wage growth, and how's that compare with inflation at the moment?
Yeah, well, exactly, Sam. That's obviously a really important question, and the short answer is that for most people, wages are not going up as fast as inflation. So it means that basically most people are suffering what's called a real terms wage cut. So the average wage, this is from the Office for National Statistics again, they say that wages are going up by about just over 5% for the average. Averages, health warning about averages is that may seem a low figure to you, or it might seem for a lot of people quite a high figure. But anyway, that's the average that they tell us that it is. But that still means that given that inflation is, we're talking about around about 10%, so that's a real terms cut. And just to drill down into that wage increase in the private sector, it's about 6%, and in public sector, it's about 2%. So again, there's quite a big gap between the different private and public sector workers at the moment. But the long and short of it is that most people what they've got coming in is not keeping pace with what's going out the door in terms of bills.
I'm with you. It's an unfortunate situation that the country's in on that respect. Now, I just wanted to take a quick look at the comments, because I noticed that we've had a few people asking questions. We've got a question here from Louise Griffiths. Thank you very much, Louise. Louise asks, what are the chances of fuel and energy prices going down in the future? So it's a really good question. I think that fuel, talking about petrol, I see, I don't know whether you mean petrol or kind of heating oil for your house, but petrol prices, obviously they are starting to dip, but a lot of retailers, a lot of forecourts, they're not passing that on, which is something that we have been writing about. The good guys with this have been the supermarkets. So if you fill up your car at a supermarket forecourt, by and large, that is a pretty fair price. You're looking at about £1.61 for a litre of petrol. That's the kind of average at the moment. That's a fair price. But obviously, you know, we'll all remember the times only a year ago when you could have knocked 60p off that, and that would have looked like a reasonable price at the time. So the cost of fuel, it is starting to come down very slowly. But I think, you know, we're not going to be looking at, you know, returns to, you know, £1.20 a litre for as long as we can see. And in terms of energy bills, I mean, unfortunately, it's a similar situation. It's very difficult. Even people whose job it is to analyse energy bills will struggle looking into the future more than about 3 to 6 months. But I mean, what they were saying was that energy prices would go up in October quite considerably, then go up again in January, and then past that point, they were a bit uncertain. Because we've now got this energy bill price freeze, you wouldn't be paying more than you know, the average household. I say you wouldn't be paying more than, obviously it's still a huge bill, £2,500 a year from October, fixed for 2 years. But there's quite a lot of uncertainty past January about what's going to happen with energy bills. It may well be that they go back to, you know, next year to a slightly more normal level, and I would hope that's the case. But at the moment, it's quite hard to say with any certainty beyond, you know, January 2023 what's going to be happening with these. But you know, as soon as we know, we will absolutely kind of, you know, we're writing news stories about this. It's going to be on, you know, as soon as energy bills start falling, it's going to be on the front of every newspaper. You won't be able to miss the news that is happening. And Jane Neagle says, I live in Northern Ireland. Is there any help with oil prices? So Jane, unfortunately, as far as it's the same situation in Northern Ireland as it would be kind of in, you know, mainland Britain, the government have said that there will be help for people who are dependent on heating oil, for example, or there's a lot of people that fall down the cracks when it comes to energy bills now. When you say oil, yeah, I assume that's what you mean, heating oil. There will be a pot of money, the government has said, to help people who don't quite meet the criteria of the scheme as it's currently set up, but they haven't said any more than that. We are hoping for an update next week, because next week we're expecting what the government calls a fiscal event, and we like to call a mini budget. So the new government will kind of set their stall out slightly, and they'll talk about hopefully the future when it comes to things like taxes, energy bills, you know, things like that. They'll just kind of give a little bit of an update and hopefully fill in some of the blanks. So unfortunately, it's a question of watch this space for now, but we hope to bring you a bit more of an update on that next week. And the smart money is that this will happen sometime between Tuesday and Thursday. So yeah, as I say, yeah, sorry we haven't got anything a bit more definite, but we will definitely have a bit more of a feel for this next week. So Graham, just sort of, you know, turning back to inflation just for a second, we saw obviously a very small drop in inflation, down from 10.1% down to 9.9%. You know, how excited should we be by this? You know, are prices going to continue falling, or is this just a blip?
I think it's undoubtedly going to be a blip, but a welcome blip, though it was. Although, as you've explained about with the price guarantee, I mean, what that basically is doing is taking out basically what analysts are saying about 4 to 5 percentage points, but from what they thought inflation would go to. So it's, you know, it's good in the sense that it will. People were talking about, I think I mentioned earlier, about sort of over 20% inflation. That was kind of at the more extreme, but certainly the Bank of England was talking about inflation, CPI inflation reaching over 13% later this year. Now, Bank of England hasn't given an update on that. I want to point out the Bank of England's actually got an event next week as well, which is when the Monetary Policy Committee announces whether it's going to put up interest rates. I'll touch on that in a second. So it might, and again, it might refer to where it thinks where it thinks inflation might go. So the sort of good, and I caveat that word, the good news is that the inflation is probably not going to go as high as some were fearing because of what's happening with the price guarantee for energy. But if people were listening to this are wondering where inflation is going to go, I think, you know, the reality is in October, energy prices the pressure is still upwards. So I think that inflation will continue to go up, and not least, I mean, we were talking about food and drink prices earlier on, and certainly the mood music there is that they're going to continue to go up. So I think inflation will continue to rise to levels that are still very scary, and where wages are not keeping up with them. That's the most important thing. Now, I mentioned the Bank of England. So next week, the MPC, the Monetary Policy Committee, is probably, all the analysts are expecting it to increase its base rates, bank rates, essentially interest rates, or certainly will influence interest rates in the real world for you and I. It's expecting to increase its base rate, which is 1.75%. Analysts are thinking that they'll announce what's called a 50 basis point increase. So that would take it to 2.25%, maybe even higher than that. The reason for that is that even though inflation may not be spiking as high as it previously thought, as was previously thought, they still want to take some of the heat out of that inflation and try, if they can, to get it back down to 2%, which all the analysts are expecting it to do. Next year we may be in a different place, but there's still a lot of pain to come for many households.
Yeah, and obviously, if there is any kind of silver lining to all of this, is that things will go back to normal. It's just a question of, unfortunately, it's just a question of getting through the pain until that point. Now, I just wanted to take a moment to talk about inflation, how it affects your pension, and any savings you might be lucky enough to have. So if you kept 100 quid under your mattress for a year and inflation stayed at 9.9%, the spending power of that £100 in the real world will fall to about £90 10p, because it's kind of fallen, the real value of it has kind of fallen. Obviously, there is a cost of living crisis going on, and spare cash to save, it might be an impossible dream for many at the moment. But in an ideal world, savers could put any of their spare cash into a deal that paid an interest rate higher than inflation. So the spending power of their money over time, it would grow and it wouldn't shrink. Unfortunately, as you probably well aware, we're not living in that world. There are no savings deals on the market that pay more than inflation. At the moment, so the two favourite savings deals normally are easy access accounts and fixed term bonds. The best easy access account at the moment pays 2.1%, and the best fixed term bond for 1 year is 3.32%. And obviously, that's an awful long way away from 9.9%. But this is something that we always hammer home as kind of personal finance journalists on the Mirror, is that this doesn't mean that savers should lose heart. If you do have any spare cash, putting it into a deal that pays the best possible rate means that you still offset the way that erosion will eat away at your hard-earned money. But let's also talk about pensions. So inflation, it is bad news for your private pension or your workplace pension, because it eats away at how much cash you're going to get in retirement. But it is much better news for your state pension. So just taking those kind of one by one, if you're working and you're saving for a pension, but you've not yet retired, your pension is probably growing, it varies, but in the region of 3 to 7% a year, something like that. If inflation is higher than that, as it currently is, the value of your pension pot gets eaten away slowly. However, if there is any good news to that sentence, it's that over time, the value of pension pots pretty much always rises. So if you can afford to stick with it, it is better to do that in the long run. We've seen an awful lot of stories of people who, have needed to take money out of their pensions. At the age of 55, normally you can start taking cash out of your pension, depending on your deal. There are an awful lot of people who, just because of the cost of living, have needed to do that, and that is understandable. But if it is possible to stick with it, in the long run, it will pay off. Some pensioners, they're lucky and they've got deals which are actually linked to inflation. So their pension pots wouldn't lose money in the way we're talking about. If you're really lucky, you'll have a pension which is linked to the RPI measure of inflation, which tends to be higher. But unfortunately, the government does plan to axe RPI from 2030. So any pension increase you've got year on year will be smaller from that point. But there's an awful lot of people I know who are state pensioners. And for the state pension, it works slightly differently. and inflation is actually not necessarily a bad thing. And that's due to, and we're about to find out next month, or actually just afterwards, what the level of the state pension increase for next year will be. Something called triple lock means the state pension will grow every year, and it will grow by 2.5% earnings growth or inflation. So one of those three things, hence triple lock. And the month that matters is this month, September. So whatever inflation is this month is how much the state pension will go up by next April for a whole year. So inflation is, as we keep saying, is 9.9%. There's every chance that in September it will be higher than 9.9%. So provided the government don't change the goalposts, you could be looking at a 10% or more increase in the state pension from next year. Obviously, a lot of that money has got to go towards paying increased bills, but it will hopefully be something of a comfort to people of above retirement age. Now, we've gone past 1:30. We were ever so slightly late starting this. I apologise for that. And so I just wanted to take a moment to talk about some of the other government help that's available. So if you are struggling, this is some of the pots of money coming from the government, and there's quite a few announcements coming kind of over the next couple of months. A lot of this stuff is going to come online. So from October the 1st, a lot of households will start getting a £400 discount on their energy bills. Now, exactly how this works will vary according to what meter you've got and according to what energy company you are with. But the thing that won't change is that you will get a £400 discount, and it will be spread over several months. Then there's also, if you are on means tested benefits, you will qualify for the second half of the £650 cost of living payment. That's being made from the autumn. So the first payment of £326 was made earlier this year, although many claimants tell us that they still haven't had that. But the second half of £324 is being made in the autumn. People who are pensioners and who normally qualify for winter fuel payment will get a £300 energy bill payment, and that is going out in November or December. That is on top of the existing winter fuel payment, which is confusingly also worth up to £300. There's also £150 for people who are on disability benefits. That is a tax-free lump sum. It won't affect your other benefits, and that is being paid out from September the 20th. So very, very soon, and it will be paid out in September and October. If you get housing benefit and you don't get any other benefits, you should qualify for the £650 cost of living payment. But unfortunately, the way the government has constructed this system is that you won't. And that's because they have trouble apparently tracking down people who claim housing benefit and no other benefit in order to give them the money. So what the government is doing is forwarding people in that situation to something called the Household Support Fund, which is their kind of catch-all answer to anybody who falls down the crack of the system that they've announced so far. So to find out about the Household Support Fund, you have to speak to your local council, because the money is being handed out by region, and the councils are responsible for handing that cash out. So we have heard of payments. Normally they're in the region of maybe up to £100 or £200. Apparently one family actually got £600 from their local council, which is the highest that we've heard. Some families get vouchers to spend at things like supermarkets, but anybody can apply to that, and it's well worth doing. You do have to prove, unfortunately, you do need to jump through the hoops, and you do need to apply for it. But it's well worth looking into if you are struggling with the rising cost of living. So just wanted to take a very quick moment just to answer a couple of questions. I've got a question here from Louise Griffiths again. Hello, Louise. Do we still get the second payment the government was giving us towards our electric bill? So yes, the answer is you should do. I'm just going to read between the lines slightly. I assume that you are on means tested benefit, and that therefore you were qualifying for the £650 cost of living payment. So you will have had your first payment from July onwards. So the answer is yes, you will. So if you qualify for the first one, you will get the second one. There's no, just one follows the other. There's no sort of second qualifying period. If you were eligible for the benefit that you're on, as of the 25th of May this year, that's all you need. So you will get both payments automatically. There is a bit of a question mark over exactly when you get them. People don't all get them on the same day. And the government has been dragging its feet with that first payment. Some people still haven't had it. But the only exception is if you are on tax credits. So if you were on child tax credit, for example, working tax credit, you do qualify for the payment, but you will get it later than everybody else. So you will get your first payment from the autumn, and you'll get your second payment from the winter. And that's because child tax credit, the system is being scrapped. It's being replaced with universal credit. So what's going to happen is the government didn't want people who were claiming tax credits to get one half of the 650 quid now, then get moved over to universal credit, and the government was worried that they would pay these people twice. So because the government didn't want that headache, if you're on tax credits, you'll get it later. If you're on any of the other qualifying means tested benefits, then yes, you will get that money later this year. Now, I think that's probably just about everything that we've got time for today. Thank you very much, everybody, for tuning in. I hope you found it useful. A big thank also to Graham Hiscott for breaking down some of this complicated subject for us. Thank you very much, Graham. We'll be back next Thursday at 1 p.m. with another Cost of Living Facebook Live, and I hope to see you all there. Thank you.